I think that's, within the realm of expectations. Ethereum, I think first needs to clear its prior highs of around 4,800. It's within 6% of that now. Believe it or not, Bitcoin's obviously been making many new all-time highs this year, but Ethereum is still below its 2022 highs, 2021, 2022. So I think once it clears that level, I think Ethereum and small caps tend to be correlated. So to me, 7,500 actually might even be on the low end of what's possible.
Really?
I think I've seen many targets of 10 to 15,000.
The broader lesson extends beyond individual trades to market psychology itself. In cryptocurrency markets, where technical breakouts often trigger cascading moves and algorithmic responses, the cost of being wrong about direction can compound rapidly through leverage. Conversely, positioning for trend continuation, particularly at key technical levels like Ethereum's $4,800 resistance, often provides more favorable risk-reward dynamics. Tom Lee's Ethereum analysis appears increasingly prescient as ETH hovers just below its critical $4,800 resistance level. His correlation between Ethereum and small-cap stock behavior suggests that once this technical barrier breaks, we could witness the kind of explosive price discovery that characterizes breakthrough moments in crypto markets. The $7,500 baseline target, with potential extensions to $10,000 to $15,000, reflects the asymmetric upside that often follows prolonged periods of consolidation. Tom Lee's identification of Ethereum's 28% outperformance versus Bitcoin directly validates the institutional thesis while exposing the whale's strategic miscalculation. Lee's emphasis on smart contracts as Wall Street's essential infrastructure, evidenced by Ethereum's dominance in stablecoins, creates persistent demand that undermines short positions, regardless of technical analysis. The whale's $9.88 million realized loss, plus a $18 million floating loss on 20x leverage, demonstrates how fundamental adoption trends can overwhelm speculative positioning. Their $5,680 liquidation price sits dangerously close to current levels, forcing a reduction in position rather than conviction-based holding. Lee's 10 to 15-year macro outlook frames Ethereum as institutional blockchain infrastructure, not a speculative asset. This utility-driven demand creates structural buying pressure, making sustained shorts increasingly costly. The whale's inability to exit cleanly reflects how institutional momentum can trap contrarian positions, particularly when leverage amplifies every adverse move. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention to help us grow. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
The surprising sort of hit for cryptocurrencies this year, because it's up 28%, outperforming Bitcoin. But in some of the work we've done, we believe it's the biggest macro trade over the next 10 to 15 years, and a lot of it has to do with the fact that stablecoins have really become the ChatGPT moment for crypto. And now we have the Genius Act and Project Crypto from the SEC, which is Wall Street essentially running onto the blockchain. But one of the best ways we believe to sort of have exposures through Ethereum treasuries, and that's a company like Bitmine, which I've become chairman recently. And it's different than Bitcoin because with Bitcoin, you can't really do programmable contracts, so smart contracts. Wall Street needs to find a stable and legally compliant blockchain to work on. The majority of stablecoin creations are taking place on Ethereum. And when you look at where JP Morgan is building a lot of its layer 2s, or Coinbase or Robinhood, they're choosing to do it on Ethereum. So it is the place where Wall Street is essentially financializing the system. In early July, Bitcoin made a breakaway move, and I think Bitcoin has been leading the markets by a month. So believe it or not, I think that this is the month that the S&P, makes new highs towards 6,500, 6,600. I think that's, within the realm of expectations. Ethereum, I think first needs to clear its prior highs of around 4,800. It's within 6% of that now. Believe it or not, Bitcoin's obviously been making many new all-time highs this year, but Ethereum is still below its 2022 highs, 2021, 2022. So I think once it clears that level, I think Ethereum and small caps tend to be correlated. So to me, 7,500 actually might even be on the low end of what's possible.
Really?
I think I've seen many targets of 10 to 15,000. Well, I think it's just a reflection of the fact that the market was bracing for a hot CPI, knowing that not only was the Fed, but economists were warning that we'd start to see inflation coming through in the July CPI report. So I think it was actually elevated compared to where it was in June, but I think it was much better than expected. So it's one of those rip off the Band-Aid moments. Gives sort of that all, dovish signal, or, Fed is resuming its cutting cycle. And I think that's things that benefit from liquidity. So that's financials, small caps, and also, believe it or not, Bitcoin. Part of it is positioning and sentiment, because I think investors were thinking this is the dog days of August and that we'd be getting some hawkish inflation data. So I think some of that's just the relief that, in fact, CPI was better than expected. I think it's also just follow through because we've had a pretty decent earnings season. And at the end of the day, the economy is holding up pretty well. And, I'd say that it has a lot to do with the fact that August will probably be a surprise and markets are going to be stronger. Really, one of the granniest of our granny shots is NVIDIA. It's still one of the most important companies. Well, it's probably the most important company in the world. And in terms of forward multiple at 30 times, it's actually still reasonably priced. I believe its PE multiple is still ranks number 38. There are 37 stocks in the S&P 500 with a higher PE than NVIDIA.
Tom Lee stresses that in today's deeply interconnected financial landscape, momentum is not just a short-lived burst. It often runs far longer than most traders anticipate, with strength building on itself rather than dissipating. His market approach combines macroeconomic adoption narratives, sector rotation trends, and precise technical indicators to create a multi-layered framework for anticipating asset behavior. This allows him to draw connections that many overlook, such as how Bitcoin's role as a leading risk-on signal can set the stage for subsequent equity rallies, how Ethereum's pending breakout could be the trigger for an extended period of outsized gains, and how entrenched structural demand can overpower even the most aggressive leveraged contrarian bets. These principles were vividly illustrated in the latest market action. Bitcoin surged to a new record high on Thursday, driven by a combination of rising expectations for a more accommodative monetary policy stance from the Federal Reserve and additional tailwinds from recently announced financial reforms. The move was not just incremental, it marked another milestone in Bitcoin's ongoing role as a barometer of speculative confidence. In early Asian trading, the cryptocurrency reached a high of $124,002.49, surpassing its previous peak set in July. Ethereum mirrored the bullish sentiment, climbing to $4,780.04, its highest level since late 2021. Alongside spot price gains, traders placed significant bets on further upside, with more than $5 million flowing into $5,000 strike call options expiring on September 26, signaling firm conviction in a breakout before the end of the quarter. Ether is currently trading at $4,670, which represents a notable 26% monthly gain, according to CoinDesk data. Lee's breakaway framework ties this type of crypto momentum directly to equity performance through what he calls the one-month lag theory. In practice, this means that Bitcoin's decisive July breakout should translate into the S&P 500 reaching the 6,500 to 6,600 range this month. It's not a vague correlation. Lee's view is that Bitcoin's leadership serves as a reliable forward indicator for equities, as the same risk-on appetite that drives crypto tends to spill over into stock markets once initial moves are digested. This mirrors the earlier examples seen in cryptocurrency cycles, where sustained uptrends persistently punish traders fighting the trend until prices reach levels that finally exhaust buying momentum. The implication for equity markets is both strategic and tactical. As the S&P 500 approaches Lee's projected target zone, the rally may begin to lose some of its momentum, especially if traditional overbought indicators start flashing warning signs. The key challenge for market participants becomes identifying when the rally's primary fuel source, often a combination of underweight institutional positioning and sideline cash, has been sufficiently deployed. Once that shift occurs, the absence of new buyers can cause even the strongest uptrend to stall, creating conditions for a reversal. For now, however, Lee's analysis suggests that the interplay between crypto strength and equity performance remains in full effect, with Bitcoin and Ethereum serving as both a warning and a signal for what could come next in broader markets. Are you ready to see how crypto trends can signal moves in the broader markets? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support and I hope you enjoy the video.